Well, the Canada Mortgage and Housing Corporation estimates that the country will need an additional 3.5 million housing units beyond initial estimates by the end of this decade. And how many does it expect will be built every year? Well, 200 to 250,000. That includes all homes, not just affordable housing, which the corporation describes as shelter for which Canadian households spends less than 30% of their pre-tax income. That shortfall is quite the gap. Our next guest has some suggestions on how the private sector can help build more affordable housing in Canada. Here's Nick Gefucia, Vice President of Affordable Housing at construction services company EllisDon's. Nick, thanks so much for coming in today. Really appreciate it.
Thank you for having me.
So can you tell us about what falls under your umbrella? You do affordable housing at EllisDon's. What do you do?
Sure thing. So EllisDon's Community Builders, which is our group, we focus on affordable housing development. We're specifically under EllisDon's Capital. EllisDon's Capital is the development and equity investment arm of EllisDon's, and we're separate and distinct from EllisDon's Construction, but we work in a vertically integrated structure. Our clients are predominantly nonprofit organizations, Indigenous groups, and municipalities across Canada, and we focus on affordable housing developments, which just means that it's developments that incorporate a large amount of affordable housing components within those buildings.
How common is that there would be a large proportion that would be affordable housing in developments? Because you often hear, you have to have a certain amount in this particular building or this particular neighborhood or what have you. But it always sounds so limited.
Not common enough, and that's why we're in this crisis. So our model is actually specifically designed to optimize the affordable housing component in any build. So we're not your traditional real estate developers seeking sort of, top investment returns and finding a way to fit affordable housing in. We serve those that want to benefit from as much affordable housing as possible. But the model is, as you allude to, is it's usually a percentage of a component, 20 to 30% at a minimum, to attract CMHC financing with private development market units to support the pro forma, to support the economic viability of the project. But we need to enhance that because we're at a 500,000 unit per year housing gap that we need to get through to 2030 to meet the CMHC targets. So
when you're approaching this, how do you optimize it so that it does work for the economics of affordable housing?
A few different ways. It takes a very, very complicated capital stack. So we usually work with CMHC financing, co-investment, rent construction financing, whatever programs they have. They just recently had the Rapid Housing Initiative. Usually work as a basis with that program. And then what we'll do is orchestrate a pro forma where we look for, contributions from other levels of government, provincial, federal, and as much as possible, reduce the amount of equity that our clients need to inject into the project, because these are nonprofit organizations. They're not flush with cash. They have huge operating, obligations. So we get creative. We have a great team that we have to do that. It comes from 2 decades of infrastructure development across Canada. So very skilled at this, but it's a very challenging environment, as you can imagine.
What do you make of the argument that for housing to be more affordable, we just need more housing overall, not necessarily specifically affordable housing?
I somewhat agree with the concept, because if you look at the housing spectrum, you go from emergency shelters up to attainable, and attainable just means that you're scraping market. And in that spectrum, we need supply to address all of those needs. Like I said, it's 500,000 units a year that we need to accomplish before 2030 to meet this target. Some of that's supportive, but generally supply is going to increase affordability levels that the CMHC is looking for and that the federal government is targeting.
So how many projects do you have going on right now? What's your kind of capacity?
Well, we're a 3,000 employee company. And we restructured in 2019 so that our company can make this a top priority. So from the CEO down to the most junior employee, this is important to us. We have 8 development management projects on the go, so that we're upwards of about $1 billion worth of total capital costs under advisement. And that's actually, trying to get shovel into the ground, trying to use government programs with active projects that our clients have interest in and actually building and operating. Otherwise, the other half of our work is advisory. So we advise, nonprofit organizations that might might not have the skills, expertise, or just the foresight to move forward on projects to kind of make a go, no go assessment so they don't invest too much in a project that might go away that they may not want. So, yeah.
We heard from the federal government this week that it was opening up some land for use for housing, like federally owned land. And I just wonder, how much of an impact do you think that sort of effort would have? Is actual, attaining the land a big part of the problem?
I would say there's always one thing that we can start with. It's land, cash, or a vision. Land is probably the easiest thing to start with because there is actually, you can envision what you can do on this piece of land. You can work with your municipal governments to zone, and you can work with the nonprofit organization for the vision. So having the land is absolutely critical. I think that doesn't need to be said. However, you need cash. We need cash to actually inject into the pre-development services and the pre-development activities to get shovel in the ground, and that's the next piece for sure.
When you think about the Housing Accelerator Fund that the government is using to, get cities to make some changes when it comes to, rules around zoning or what have you, it seems to be working in the sense that it is having an impact on how cities are doing things in the way that the government is wanting, at least. What would you want from that, do you think? Do you think that there's changes that cities could make that could make, getting affordable housing built easier? I
think the Housing Accelerator Fund is a great step. I think it really gives capacity to municipalities that just have a logjam of entitlements and approvals. I think that will move a lot of existing projects along. What I would like to see is housing considered infrastructure. If we don't solve this problem, it's going to go into perpetuity. We have a systemic issue in Canada. We need to look to the private sector for leadership. We need to look at it in the same way that we built infrastructure across Canada, that there's always going to be people in need of affordable housing. We're going to have to think in scale, breadth, and capacity in terms of infrastructure in that perspective. And also because when you're building communities, you literally have to think about infrastructure. This is going to put great strain on our towns and provinces. So we have to think about what a community looks like just even outside the residential developments.